Real estate in the San Fernando Valley is heating up, but not in the frenzy we saw a few years ago. Prices are steady, sellers are getting strategic, and buyers are finally catching their breath. So, what does that mean for you this spring? Let's break it all down. Hi everyone, I'm Rosie Agopian, and this is your San Fernando Valley real estate market update for March 2026. Whether you're thinking about buying, selling, or investing, you'll want to hear about the subtle but important shifts happening right now across the valley. Spring has officially brought some renewed life into the housing market. Mortgage rates have stabilized in the mid 6% range, and that's giving a boost to both buyer and seller confidence. Inventory is still tight, roughly 10 to 15% below balance levels, but it's improving slightly compared to late 2025. As a result, home values are holding firm. The median single family home price across the valley is sitting around 880,000. It's up 3% over last year. It's not a surge, but it's steady growth, a sign of a healthy, balanced market. Let's dive into what's happening community by community, starting in the Western Valley, where activity has been especially strong. Calabasas, the market remains vibrant, driven by luxury demand. The median price here is around 1.9 million. Homes in gated communities and newer developments like the Oaks continue to attract high-end buyers, many closing in under 30 days. Woodland Hills. Family buyers are active here thanks to great schools and lifestyle convenience. The median home price is about 1.35 million. Updated homes under 1.2 million are selling very quickly, often with multiple offers. Tarzana, we're seeing consistent strength here too, with a median around 1.25 million. Buyers love its quiet streets and larger lots, especially south of Ventura Boulevard. Renovated mid-century homes are drawing special attention. Now, West Hills. This area continues to be a value leader. Homes average around 1 million, offering larger yards, suburban feel, and strong appeal to families upgrading from condos or first homes. Sherman Oaks and Studio City. Still power markets in the valley. Homes are average around 1.4 million, with proximity to the west side keeping demand high. Northridge and Granada Hills consistent, family-centered markets where prices range from 900 to 1.2 million. Homes in great school district still move quickly. Van Nuys and North Hollywood redevelopment zones are breathing new life into these areas. Condos and starter homes between 600 and 700 remain the most accessible entry points into the valley. Buyer activity across the board, buyers are back and they're taking their time. Unlike the peak frenzy of past years, today's market lets buyers include contingencies, negotiate repairs, and secure more thoughtful deals. However, affordability remains challenging, so we are seeing creative moves. Buyers expanding search areas using rate buydowns or exploring off-market opportunities. A practical example, a buyer priced out of Woodland Hills last year might now find value in West Hills. Flexibility is key. Sellers this spring are facing a smarter market. Overpricing is risky. Buyers are informed and selective. But when a home is prepared, staged, and priced correctly, it's moving quickly. The average days on market now sits around 28 days, down slightly from earlier this year. Homes that show beautifully in photos and videos often sell in the first 2 weeks. If you're considering selling, focus on light upgrades, paint, landscaping, decluttering, professional staging, realistic pricing based on today's comps. Those details make a visible difference in offers and closing speed. Now, rental market. The rental market across the valley remains solid. A one-bedroom apartment now averages around 2,250, and two bedrooms run closer to 2,800 per month. In Calabasas and Woodland Hills, high-end leases often exceed $5,000 per month, fueled by families waiting for the right time to buy. Investors continue to perform well in those submarkets, especially near transportation routes and newer retail areas. Heading into late spring and early summer, the outlook is optimistic. If rates tick closer to 6%, we'll likely see another surge of buyers entering the market. Job stability throughout Los Angeles County is supporting steady home demand, and limited supply should keep prices firm through mid-year. So overall, the San Fernando Valley market remains healthy, competitive, and full of opportunity. It's a market where both buyers and sellers can win with the right strategy. That wraps up your March 2026 market update for the San Fernando Valley. If you'd like to know how these trends affect your neighborhood, whether you're in Woodland Hills, West Hills, Tarzana, Calabasas, Granada Hills, or anywhere else in the valley, I'm happy to give you a detailed, personalized update. I'm Rosie Agopian, and I'll see you next month with more insights to help you make smart real estate moves. Let us elevate your lives and empower your dreams. Subscribe here for more. See you.